Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, October 11th, 5:35 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in uptrend since last Friday's O'Neill follow-through day, and the bulls have taken charge since then. Check the trend gauge over here. Still have leaders marked neutral, but with the green sub arrow. They're continuing to prove themselves, which is exactly what you want to see after a follow through day. One of the keys to the success or failure of a follow through day is to not see a distribution day in the 3 days immediately following. Today was the third day after the follow through day and no distribution. In fact, we've had positive closes each of the last 3 days. So that's another check we can put in the bullish box. Good stuff so far. Short term, trend improving. S&P got its second close above the 21-day moving average. Dow and mid caps are basically right on their 21. Medium term also improving. NASDAQ multiple closes above the 50-day moving average. S&P approaching. Long term, still a mixed bag, but the Dow right below the 200-day moving average. NASDAQ and S&P firmly above. Small and mid caps continue to lag there. So we're seeing improvement across the trend gauge. What happened today? Well, a little bit of a gap up at the open, and after you've been up for 3 days, that's not the best time. Anytime day three or after, when you have a gap up, is not the best time to be pouring money in. And in fact, it looked like a bull trap early as we reversed from the highs and trended lower for over 4 hours out of the gate. And then at 2 o'clock, the Fed minutes came out. For whatever reason, they sparked a rally, and a nice 2-hour rally into the close, closing near the highs of the day. Leaders were already having a decent day. Most of them, nothing's ever 100%, but the 21 over 21 was up over 1%. So that's over double what the S&P did. Here are the final numbers on the day. Big seven up 1.36%, RG8 some lagging here, only up 0.11%. S&P 500 gapped up 0.3, was once down 0.3, closed up 0.43. NASDAQ 100 led most of the day, up 0.71. Dow up 0.2, mid caps up 0.3. Russell 2000 small caps down on the day 0.15. Global diversified 60/40 stock and bond, pretty much equal contributions from both halves, up 0.48%. In-house GROTECTION, leaders did their job. We outperformed, up 0.70%. Let's get into the numbers. Here's the S&P 500. Let's go to a 5-minute chart, and you can see here the clear double trend. So here's the gap up, topped within the first 20 minutes, and then just trended lower highs, lower lows all day. Kind of trapped inside this gap down 5-minute bar that we saw yesterday right after 1 o'clock Eastern time. We bottomed right before 2 o'clock and then turned on a dime. Strong rally up into the close near the highs of the day, just barely off the highs of the day. Pretty tight range, less than 1%. We like seeing that, but very constructive action after a follow through day. Let's go back day 4. Here we see the nice bounce off the 200-day moving average. Continued strength on day 2, closing just below the 21-day moving average. Crawled above the 21-day moving average on Tuesday. Pulled back, tested the 21, closed near the high of the day Wednesday. The lows of the last 2 days critical. Let's go back to the 5-minute chart here, and we want to keep an eye on this 43.40-ish level. To hold that, that's basically right where the 21-day moving average is. It's at 43.44, and we'll, since it curled up, it'll be up slightly higher than that tomorrow. Good stuff so far for the bulls on the S&P 500. Let's go to the NASDAQ 100. Also good, 4 days up. Made a higher high today, and couldn't really ask for much more than this. Very similar pattern on the 5-minute. A little bit more strength as he actually formed a cup base before breaking down from that and then trending up into the close. So late morning, more strength on the Qs versus the S&P, and up higher on the day. Let's go to the Dow. Dow attacking the 21-day moving average and the 200-day moving average closing basically right on them, both of them, and we're flattening out on the 21-day moving average. The ADMA has hooked up, 4 days up. Still relative weakness, but you expect that in a uptrending market. That's really not a surprise. Mid caps taking aim at the 21-day moving average, basically closed just a couple of tenths of a percent, a tenth of a percent right above, just a rounding error. Not at tenths of 457.19 versus 457.38, so not even a full tenth of a percent. But hey, it's a start. The ADMA has turned up, fourth day up for mid caps. Still relative weakness, though. We want to see some strength there. After 5 days up off the bottom for small caps, we ran into the declining 200-day moving average each of the last 2 days and couldn't get above there. Above the highs of the last 2 days will be a change in character for small caps because that'll get us above the 21-day moving average. Let's go to the VIX. We got what we wanted from the VIX too, right to that 17 level, back below the 21 EMA. Declining VIX is good. That's what the bulls want to see. Let's go to the dollar. Closed flat today, tight range, bounced at the 21-day moving average. Good flat close, but positive action for gold and gold stocks. GLD right at the 21, up 0.73%. Gold stocks even better, up 1.8% into the declining 50-day moving average. And silver, uh, small move up 1% on the day. Let's flip to bonds. This continues to be money flowing into it, kind of a fear trade type thing. 4 days up off the bottom into the declining 21-day moving average. The broad bond index up 0.46 today. 6% today. TLT up 2.1% into the declining 21-day moving average. Let's check the yield. You know, the yields are coming off if the price is going up, and you can see right above the 21 EMA on the yields, hooking down off of overbought. Spent 3 weeks up there and overbought. That's a fairly long period of time. So these can go a lot lower based on the way the stochastic is pointing. Let's go to TNX, the 10-year, also lower by 1.3%, bounced at the 21-day EMA. So that's our inter-asset correlation. The setup was there. The setup finally triggered. Just too many people on one side of the boat. So now we've got the dollar coming off of overbought, yields coming off of overbought, the stochastics turning up from oversold on the RG8 and the indexes, the NASI RSI coming up off of oversold. Let's say the water is moving back to the other side of the boat. Bulls have nothing to complain about as far as the follow-up to the follow-through day. You can see I've now highlighted the bull case, the two criteria we have for it to initiate a rally and then reclaim the 21-day EMA. 10-6 last Friday was the follow-through day. Here we are 3 days after that, breaking above the 21 EMA, the second close above the 21 EMA, I should say. So for the bears to take back over, we would need to see a sustained break back below the 21 EMA. A little bit of news, PPI hotter than expected before the open, but really didn't impact the numbers at the open. We did have that trend down, but then, as I said, at 2 o'clock, the Fed minutes sparked a rally. We got CPI Wednesday before the open. Need to keep an eye on that. Fed speakers have been dovish as of late, and we're down to a 10% chance of a rate hike at the early November Fed meeting. Day count from up 3 to up 4, fourth day above the 8 EMA, second day above the 21 EMA, flipping our expectations to positive now, with this being above the 21 on the S&P and the NASDAQ 100. From a sector standpoint, with rates coming off, home builders are popping, semiconductors, XL, CK, and RE, gold, dollar neutral on the downside. XLE, as Exxon bought PXD, that's a big weighting in XP in XLE. Oil services were actually up on the day, and staples and healthcare down. From a portfolio standpoint, we continue to add. We added to Nutanix, which had a great day. It's our largest position now. Also added to VRT, second largest position. We bought Uber and we bought DFEN to get a dip a toe into the defense sector. Going to take a look at a couple other charts besides what we have in the portfolio, but the bottom line started off with an 4.5 hour trend lower, turned on a dime, 2 hour trend higher, close at the high of the day. Fourth day up, bulls are in charge. Let's see what tomorrow brings. We reserve the right to change our mind if things change. Got to be fluid with the market. So two good setups, or one good setup that we're looking at, ESTC. Look how tight this has become after an undercut and reclaim with a 21-day moving average after its earnings gap higher back at the beginning of September. Very nice tight setup there, declining volume or below average volume the last 3 days while it's tightened up. Uh, More good news from the drug front with Lilly and NVO making new highs today. Relative strength confirming that. We need to get an entry into here. I got stopped out on Lilly on that last pullback and did not re-enter. The good news, there was news today of additional benefits from these drugs for NVO. You can see the gap up there, big volume, hasn't cleared 100 yet, so it's not above the high from a couple of weeks ago. Uh, those two look great. Let's go to the portfolio now. We added to Nutanix. It showed early strength and it closed really nicely as well, up 6.3% on the day, clearly breaking above this shelf, call it a flat base or a consolidation period right above the base breakout that it had with its last earnings report. Just acting great. This is exactly how you want leaders to act. They should be breaking out of consolidations and making higher highs and not giving it up. Relative strength confirming the move, and relative strength confirming the move. And this really acted just the way you wanted it to act. It would pull back. Then when you get to near the same price level, relative strength is higher than the prior price level. Then when you break out, relative strength makes a new high also. This is the pattern, basically the exact pattern that I said we would be fishing for while we were waiting for the market to right itself. So we added to Nutanix, also added to VRT. Inside day relative strength confirming that move out of a nice tight flat base also. And then we bought Uber. 2 days tight action after popping back above the three stacked moving averages here, the 8 EMA, the 21 EMA, and the 50-day EMA. Gives you an easy stop out if that's not going to work. And then DFEN, this is the 3 times ITA. We've been keeping an eye on all the holdings in here. And took the plunge on it today. Small position just to get started. The stocks themselves are not giving up that move. So we'll participate in that. Bumped our adjusted beta up from 1.18 to 1.3. So basically 30% more risk than the S&P 500. We're willing to put more at risk when the market is acting the way it is. Quite simply. So let's go through our holdings very quickly now. We'll start with NRGU. This is one that we're down slightly on, but imagine if Israel bombs Iran's energy facilities. What do you think oil would do then? We don't speculate, but the gap up and it held the bottom and closed at the high of the day. We will respect price, but the setup is too good to get stopped out of as of right now. We showed DFEN, we showed Nutanix. How about CrowdStrike? This is the first 2 buys on the follow-through day were CrowdStrike and Zscaler. And again, perfect action from what you'd want to see out of leaders breaking out to new highs out of a congestion on the day of the follow-through day, and then following up with more strength in the days after that. We identified this sector as a potential leadership sector while we were waiting for the market to come out of the correction. Zscaler was the other stock we bought on the follow-through day, acting very well. Also, FNGU was also something we bought on the follow-through day. This is the big 7, and AMD, Snow, and Netflix. And it's showing relative strength also. Now, look, you might say, look how this is why we look at the underlying, not the 3 times charts. The single of this chart is FNGS, Note on FNGS how the relative strength line is above where it was back when it made its recent highs, even though uh, the price hasn't pierced the recent highs yet. This is, but if you look at FNGU, you would think, it's underperforming. Why be in that? But and it is, but we didn't sit through this. We got in on the follow through day when it came up through the 21 day, and then followed up above the 50 day. So never look at the relative strength line or really even the price chart of a triple or even a double ETF. You got to go to the underlying to get the true strength of it, and that's because of the daily rebalancing. All right, VRT, we showed SMCI like this setup. Tight inside day above that 300 level. Looks like it wants to blast off. We showed Uber and Palantir. We're slightly underwater on this too. Bought it a bit extended, but this looks like it has leadership qualities and wants to go as well. And that is going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. You can email my partner, Dan Stewart, if you're interested in becoming a client. That's dan@revereasset.com. I always say it's not how much you've made in the market, it's how much of that you can keep. We've shifted now from protection mode to growth mode as the market has given us the signals that we wanted to see. Our expectations now, we're right here, bull one, early bull market, inline to minor outperformance. We saw the outperformance today. We should expect inline to minor outperformance. While if the bull market really gets cranking, we'll transition to bull two. We should have moderate outperformance there. This is an expectation chart based on our performance under various market conditions. So we know what our clients expect and what we should expect from our approach. That's going to wrap it for Wednesday, October 11th. Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.